Hello, Verity traders. This is our daily market recap. Let's get into it. On the news, everybody's talking about this. The US stocks suffered the steepest drop since October as Trump tariff threats spark global risk off. So we have Trump and his plans for Greenland. Then we have the European Union now threatening counter tariffs for $100 billion. The market didn't like that. There's uncertainty, there's higher volatility. The markets fell below the 50 SMA. We need to remember though that the S&P and the Nasdaq, they get moved the most by 11 stocks. And these are the AI mega caps and tech leaders like Nvidia, Tesla, Amazon, and Broadcom. They led the sell-off in the markets because tech and cyclicals are the one that got hit the worst. Yeah, you can see that the advance and declining, we have 70% of stock that were declining and very little amount that were advancing. So we have 56% of stock above the 50 SMA and 43% of stock below the 50 SMA. This shows us that it's true that the market took a hit, but it's also true that the biggest stocks, the AI mega cap, the big tech companies are the one that drag the market down the most. There are some normal stock, other stocks that performed okay. Let's look at the S&P. So here, this is not a nice chart. This is an ugly candle. Okay. We have high volume. We broke down, we pierced down the 50 SMA. Could this become a trend change? We don't know it yet. The only thing we can do is wait. We'll see how the situation develops, because if the rhetoric gets worse, there might be another gap down, another move to the downside. We don't know that. So for the moment, we're just on waiting mode. Obviously, the Qs, the Nasdaq are even worse, but they were underperforming for quite a bit. We don't know when the AI trades are going to become good trades again. But again, as I said, these biggest 11 stocks are dragging out the whole market. And the situation is uncertain. We don't know what's going to happen. So we can't really have a clear picture for the moment. Sometimes when stocks or the market itself pierce through the 50 SMA, most of the time they bounce back. Or if the situation gets worse, there will be more people selling, so more selling pressure. There might be a gap down. It's a 50-50 situation, so we have to wait for the situation to develop. We look at the map, obviously is a bloodbath everywhere. You see this big tech sector stocks. Consumer cyclical are the ones that got hit the worst, together with financials. Financials had some good earnings at the end, but now they're back in red. But let's look at the stocks that are doing okay. Consumer defensive, they now are bullish. This is a bullish sector. The healthcare doing okay. Again, defensive stocks in uncertain situations tend to perform better. Energy wasn't that bad. And basic materials obviously got okay because of the gold and silver that moved up again because of uncertainty, because people are scared to put money in the market. Now, as far as economic calendar, we don't have much for Wednesday. We have Thursday final GDP and core PCE price index with the favorite Fed's inflation indicator. But again, I think that the news are going to move the markets the most. So we know that President Trump is going to move to Davos to have a meeting, talk Greenland with the other European nations. Let's see how that develops and if the narrative gets worse or better. I think it's going to be just like a news-focused market that we can't predict. Nobody can. As far as stocks to watch, we don't have much and we don't suggest to put on many trades. But on the bull side, we obviously have the basic materials and the gold, AA, AEM, and NM, Newmont Mining. We have Dawn. Again, the bullish trades are more on the, gold and metal side. And for the bear trades, we have obviously tech stuff. But again, there were many stocks in the tech sector that were already underperforming. So they might be a little bit overextended. So the suggestion is to wait and see. Let's see how it goes. See you next time.